The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 5th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, no problem. Let those fingers do the walking. Just go ahead and send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, and of course, inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 45 points, 24,768. Is what it's printing at. The S&P is off 1 point, 27.45. NASDAQ 100 up 11, trading out at 71.54. Russell's up 5 points. That's 0.3% to the upside. Similar condition inside the semis. They're up 4 points, or about 0.3%. Trannies are the one that are having the struggle. They're down nearly 0.9% or 94 bucks. They look like they want to retrace further. Spot volatility index, not big move there, 15 pennies, a little over 1%. Gold's up $6, nearly 0.5%. Silver is up 0.7% or 11 pennies. We're looking in that. Light sweet crude up 52 cents. Treasury bonds trading to the upside. Leading the charge, the upside, it's Amazon up $20, dollar-wise, that is. Booking Holdings up 13, Chipotle up 11, that's 2.5%. Madrigal Pharmaceuticals up 3% or nearly $9. To the downside, it is market access, something like that. MKTX down 5% or $11. Tesla is down $9. BlackRock off 7, about 1 3/10%. Alta Beauty down $5. Palo Alto Networks off 5. So there's some things to take a look at. Of course, I want to look at what you want to look at. No requests are on deck just yet, so the lines are open, as well as those email lines. So we're just going to have to go to what is the most interesting chart that Stevie is looking at. And I'd have to say it's the S&P 500. And why is that the case? So let me turn off this little bar count and retracement tool or expansion tool that I have out here just to clean it up. But it's actually kind of a cool tool to let me know how many bars there are between swings out here, as well as the retracements and expansions in an instant, so I don't have to do that math. I like that. But here's what we're taking a look at. So there's really kind of an interesting setup that we have going on inside the S&P 500. So let's go take a look at it. First, the yellow rectangular box, kind of the consolidation that we're trading within. Really, the consolidation top is going to be the actual high out here from January 26. That's not what is so interesting. What is interesting to me was yesterday, the close above the May highs out here. And that, by the way, that took place on May 22nd. That was 27.42.24. So what we saw was a close. Why is that important? Well, If we can stay above the May highs, what that says to me is that price should run up to the next swing point. That's really, in essence, the top of this rectangular or dash line box out here, which would get back to the March 13th level, whether it's the low of it, 27.58, or the high 28.01, would say that we're able to do that. Now, it's a real nuance out here. I mean, a slight nuance, because I'm going to give you a couple of them. I'm going to give you the bullish case as well as the bearish case, because both of them are actually in play as we speak at 1:11 in the afternoon. Now, when I say bearish, I'm just referring to directional, okay? Up or down, thumbs up, thumbs down, price moving up, price moving down out here. Long term, it is majorly bullish out here with regard to your 401k investment funds. It's looking very good, but not until we not until we complete the consolidation inside of the S&P. But yesterday's close was really important. I believe it was important to be able to go ahead and close above the May highs out there. You're above, look, light volume, absolutely. Let's just kind of get rid of the volume and just take a look at the price aspect of what's going on inside of the markets out here. Now, what's going on today, that is, so if you can stay above, now today has been nothing more than a test and a rejection of that level out here. So Stevie believes it's an important area to be watching. But what's also interesting about today's candlestick is the fact that yesterday's high and low was exceeded. And so that can be considered a outside day or a key reversal. For an extended condition, we'd call it a key reversal session. But in order for it to be a key reversal, there's 3 requirements. And one of those requirements would be that the S&P would have to close down by at least 1 penny. You'd have to see at least a red bar. Now, why is that important? Because it's possible that this is the completion of an A to B equals CD to the upside. Your A point down here from April 2nd, your B point out here from the trading day of April 18th, your C point, that retracement down into May 3rd. Now, you'll see it didn't exactly hit the targeted level, which would be 27.58, but it's close enough. We've actually gotten up to a high so far today of 27.52. We're not going to cry over $6 basically on a $2,700 instrument out here. So that's one. So we've got both so here we can really see the bulls and bears fighting it out with each other. Now, just because, let's go with the assumption that it does end up being a key reversal day today. Well, then what is next? Well, what would be next is on a daily basis. Let me go grab that chart for you. The S&P 500 would have to close below Stevie's red line out there for it to have really any kind of meaning of a pullback into the, I'd say, the swing point, this little red dotted line from May 29th out there. First, price would have to get below 27.3077. Of course, we know this number is going to change as price moves up and down. So just use the 27.30 level out there. We can see we also have resistance. That is at the trading session. It's not a swing point, but is the high of March 15th out here. And that price point, by the way, is 27.63. So there's certainly resistance out here. And that's what I'm looking at. So a top, maybe retracement, more likely. But if you get a close to the upside today, even by 1 smidgen, which would be a penny out here, no key reversal, price continues to move higher. And maybe all the way back into that March level out here from March 13th. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do.
Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Off 17, S&P up 67 cents. Remember, you're looking, ain't even one penny to the upside, no key reversal, no outside day whatsoever inside the S&P. So let's go out to Newport Beach, California, and speak with Garo. Garo, thanks for calling. Thanks for holding. How are you doing this morning?
How are you, sir?
I'm doing very well. Thanks so much for asking. And tell the group what you're doing with Intellistat, ticker symbol I out here, and how I can be of help to you.
Yes, I needed your opinion regarding what is the next resistance besides that $19.10 where it hit on May the 31st. Besides that, what, do you see that this will get there, or it will go higher than that? And if it goes higher, what are the next resistance? On your daily or your monthly chart, please.
Yeah. So if I take a look at the weekly time frame, you didn't mention it, but I do have the weekly up on my screen here. You'll see some black digits really coming off of the April 6th, the week of April 6th out here, and you'll see that last week was a digit of 9, which these digits are referring to Tom DeMark's system, and this is the setup here. And oftentimes when you get to that 9 count, you can see a change in trend. Now at this place, and what's nice about it is Tom had in any event, when the system fails, it fails miserably. And if we take a look at the last time we had a 9 count to the upside, weekly wise, took us back to September 22nd. And so when I say failed miserably, market didn't turn down. You had a big move to the upside back on October the 6th as well as October 13th. I think, Garo, that's what you have going here as well when I take a look at the monthly time frame chart. As far as the next resistance level out here, you know, I would go back probably to the week of July 18th. And July 18th, there was a little shooting star. And shooting stars like hammers can be tested. Again, this takes us back to 2014. So July 18th, 2014, and that's around 1978. Just because that might be resistance, you know, I would really be targeting the all-time high out here. It looks like the all-time high back in September of 2013. That's what the weekly looks like. When I put this to a monthly time frame chart and just, what a huge move off of the bottom. I don't know what these guys do, but on a monthly basis, that is a wide-ranging bar last month, even the month before. And markets don't typically end on wide-ranging bars. So I don't consider the high that we saw. You mentioned from a daily standpoint, as I put this out here 4 days ago on the trading day of June the 1st, I don't consider that to be a stumbling block. If anything, the last time there were sellers that tried to take action inside of IntelliStat would have been May 26th. That was a bearish reversal candle, bearish engulfing candle. And so now that price is above that high of 1727, 1727 should be support on a daily basis. My red line is 1761, but I would go with the old resistance of that candle session should in essence be a new support now that price is clearly above it. So that's what it looks like to me. What are you seeing out there?
Yeah, I didn't understand what was that. Where did that 9 came from?
So that is Tom DeMark. Tom DeMark has a system. I'll put this. Let me put this back to a weekly time frame, and he has a method for taking a look at continuation moves to the upside or to the downside. And he begins his count by taking a look at a current session. Doesn't matter what your time frame is, and looking to see if the current session is closed above this to the upside, is closed above the session 4 bars ago. If it does, it gets a number 1. Then you go to the next bar. Is that a close above the session 4 bars earlier? And it does. And it is just a continuation momentum way of tracking whatever it is you're looking at. Oftentimes, not always, but oftentimes, and what you should be aware of is when you get to that number 9 count, because it can be an exhaustion move out there. But you don't trade it just as that.
Would you please show me that? Where is that number 9 on your chart, please?
It's very upper right-hand side right now, and it's for last week, June the 1st out here. So it's right up at the very top. It's small. Granted, let me see here if I can enlarge this for you, for everybody at home. Let me see. I don't know if I can. Let me see here how easy it is for me to do that. It's really not that simple right off the top of my head. But what I can share with you is that it is at the it is above last week's bar.
Okay. Very good. Very good. I saw that.
If we were to see a turn here, then we would have a different story, but we don't. And it looks to me like that's going to be taken out, and then that's just simply going to suggest to you that there is more momentum to the upside. Are you looking at this from a potential? Tell me what you're at. So when you called, what were you? I know you were looking for a resistance, but for what reason?
For daily trading, that's all. Because I've been trading this for a while,
okay.
and here I have that one. When I saw that, what's the name? $19.10.
Yes.
That is my. There is a resistance there at 1902, and
sure.
then there is a resistance at 2105. I wanted to see that if my resistance matches with your numbers.
Yeah, I don't
have such a thing as 9. That is a Tom DeMark. That is the indicator.
Yeah, Tom DeMark is he's a great technician out there. Very cool system that he developed. Very complicated system, I would say. He's got a couple of books that have been written about it. I kind of consider myself to be somewhat knowledgeable about this stuff, and I had to read his book so many times just to truly get it. But I do get it, and they're good indicators. And the 9 count is just one of them. I've got other digits that are on my screen as well. But just simply to be able to answer your question and what I saw, which is I don't see resistance. I see this right now potentially going all the way back up to its all-time highs out there.
So there is no digit after 9. After 9, the candle will collapse.
No, 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 no. It just tells you that you had a 9 count. Does not say whether. It just says, boy, this has been like on a weekly time frame. It just simply is saying this has been a marathon, and maybe it's going to run out of gas. But in order to run out of gas, you need to see price moving to the downside. I don't see that. I don't see that in any way that I look at this stage out here. And therefore,
yes,
those 9
there's
counts.
No weakness here at all.
No, there is not. No, this is extraordinarily strong equity. And once this got above the high from 2017, this thing has just been an absolute rocket ship. And it looks like it wants to continue to rocket higher out here. I just don't see anything with the tools that I use that would suggest to you that it wants to do anything different other than get back to the highs out here, the all-time highs.
Very good. Very good. Very good. Very good. Thank you very much. I learned something today. Thank you, sir.
Oh, perfect. Perfect. Thank you. That was Garo in California. That was IntelliStat out here. And Garo, last month, it had the biggest volume that it's had coming into this thing. This is a rocket ship. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got gold trading up by $5 out at 1302. Let's go out to Park City, Utah, and speak with Peter about gold. Peter, thanks for calling. Thanks for holding. How are you today?
Hey, not a problem, Steve. Thank you.
Yeah.
Hey, just several random questions, like kind of a little longer-term historical view on gold, and it's only a few months, but are we looking at a potential where gold's just going to stay flat till late July, early August? And then
why July
at
or
that
August?
point in time, take a bid. And the second question is, going back to 2008 when, the market started to crash and basically the only value that people could get was selling gold. So as a result, it tanked while I was in Shanghai. I'm like, oh, it was lovely. So my question is gold being suppressed a little bit on the fear of what occurred before, and we just, those in that market are just questioning whether it could occur again. Two questions.
So, sure. So let's see if I can help to answer, at least give you my viewpoint on what gold is or isn't doing. And so the larger picture, I'd like to try to get the larger picture correct if I can. And that is as follows. So just give me one moment here to try to.
Oh, you're good. Take your time. No problem.
Yeah, I'm just, we're in June, so I think this is going to be the right page that pops up. Okay,
the
so.
August contract at the earliest, but.
Yeah, I wanted to get the big picture. So there's two big picture things that I've been looking at. The first one, Peter, is that back in 2003, this is the monthly continuous contract that I'm taking a look at. There was a beautiful signal that was, excuse me?
Oh, no, I was looking at your first screen, which. The black one that had stuff going straight up and straight down. I'm like, wow.
Yeah, we'll go take a look. We'll go take a look at that. That's how I'll kind of feed right into it. So,
okay, perfect.
Earlier in the year, and it was in January, I was looking at a pattern that was similar to back to the 2002-2003 timeframe, and that is there's a phenomena when the price oscillator, difference between two exponential moving averages, 19 and 39 are what I use. When that gets to zero, you then start take a look at price and Stevie's red line, and a positive test of that actually took place. If I can try to find the actual date, was back in 2000. And all right, it's not going to let me do it. It was where my arrow is pointing on the screen. August 2000.
Like roughly December, January of 18.
Yeah, and we got that same pattern. That exact same pattern took place here in January of 2017. Monthly chart that we're looking at. So that's it. Okay, based on that, it looked like gold was getting ready to take off topside. Bigger picture. That still is in play. And it's in play as long as price stays above my red line, which is basically where we're trading right now. So that's a big picture out here. Gold on a monthly basis has a rising price oscillator above zero. But this chart here that you were looking at, gold is not going to do anything in U.S. dollars until it's ready to do anything in every major currency. So whether that's euros, which is panel 2, or whether that's yen panel 3, or whether that is Great British pounds panel 4, gold has to be moving higher. Any asset has to be moving higher because the global flow of capital is going into that instrument, whatever it might be. It can be an index. It can be a commodity such as gold. And so that's the larger picture. We do not have that right now. We do not have gold.
Right. No. And you're by the way, your webinar was awesome on that. Just
thank you. Thank you. Appreciate that. Thank you. And if we take a look at gold in dollars, that's what this chart is. So now we're just kind of sizing down. We're going from bigger picture monthly to where we're at right now. Gold can't even get above 1308.60, and 1308.60 is the May 1st. So to answer your question, is it possible we're just going to go sideways? Well, when we break down gold on a daily basis in terms of euros, yen, and pounds out here, that's really what the signal is. It's certainly not a unanimous vote to go higher. And so now I don't know why you picked out the June or July time frame. Not that that's a big issue. You mentioned that.
Well, it's
I can't really time it.
going into August, and you have the Indian markets and stuff starting to buy.
Okay.
So historically, that time frame at least puts, I guess the best way to put it, at least puts a floor.
Yeah. So at this stage here, I kind of consider the metal itself to be dead money. It's just going sideways. I believe your conclusion is accurate. Right now we're trading in a range between the May 25th high and the low out here on May 21st. Maybe it's going to break to the upside or the downside, but right now it's just a
But it's
sideways.
not going to break far. Like, I think that's the reality.
It could. I can absolutely make the case just in an A to B equals CD to the downside that gold could break pretty hard to the downside, because we know gold will typically do more than a 1-to-1 level. And so instead of 1264 being a downside target, 1245 and 1222 are really wide open. I'm not forecasting that just yet, but because on a daily basis, gold still hasn't busted out its the bottom of its TAS market profile. And that level that people should be paying attention to, let me get back to that. That'll take just a moment. That level is priced at 1291.30. Peter, I think if there's a close below 1291.30, and what gold has done so far today is made it up to the top of its TAS daily profile. If you're a short-term intraday trader, you needed to be aware that 1304.80, which is basically the high, 1304.80, exactly the high, that was running into resistance. Doesn't mean you have to go. It means to tighten up your stop. If price can get above that level, okay, great. Then it has higher to run back to the prior swing point, maybe back to that consolidation area that you and I just looked at. But right now, gold has run into resistance, and I'm looking. I keep looking, and for
that I know. So I guess looking at it really quickly, though, the question I would then give you one more, and I can hang up, and you can take it after a break or whatever.
That's okay. You got the floor.
The euro is actually stepping up a little bit, and
yeah, I think that gold priced in euros, when we go back and we take a look at it, gold priced in euros, has done a better job than any other currency at this stage. But what it failed to do was get up to its swing point from September the 5th out here. And right now it's come back to support. So support was a break above a prior swing point. I'm using November 7th. That's panel number 2. We saw a break above that on May 24th. This morning, price and yesterday, price pulled back to test that. But this is also just range bound out here. So again, I just don't see a ton in it. And as you know,
not the right time at the moment.
Yeah, I was surprised. I guess I shouldn't have been surprised. I went through all of the mining equities, as you know. And after going through those, I was like, okay, we don't want to be here. I just didn't see the mining equities, especially the top 5, behaving very well. So, yeah, I just don't see it right now. If things change tomorrow, then we'll know.
Next month or two.
Yeah.
Hey,
all right,
Steve, thanks so much. I appreciate it.
Okay, thanks for calling. That was Peter in Park City. We've got a number of questions that have come in, so we get back from this break. We're going to start on those. And Dow's off 28, S&P up 28 cents. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we've got about 5 questions, 6 that are in the queue right now. So let's go straight to those. The first one came in was, I believe it was from Peak D inside the Tiger's Den, wanting to get a price projection inside of ticker symbol CYBR. That's CyberArk software out here. If we take a look at this tool, Stevie's tool out here, and we look at the daily time frame chart, I don't see any type of signal other than a bullish signal out here. Price just keeps hovering around Stevie's red line, about where it's trading at right now. So I don't see anything majorly concerning there. As we take a look at the daily, the weekly, the monthly time frames, prices are above the tops of those profiles out there. So I just simply going to, I don't know what your time frame was. I'll just simply come take a look at the monthly time frame chart. Now, look, there was 13 million shares in September of 2016, was taken out last month with 10 million shares peak. So it's light volume, but you're still above 59.28. If it stays above 59.28, 67.12 becomes the next area. That's your 1 to 1A to B equals CD to the upside. But if you get inside that swing point, and in essence, that's really what it did last month. So it crossed a B point, the prior swing point with light volume. However, it closed inside the session from June 1st, 2015. The low was 60.30. That was 72 million shares. You're pushing a swing point with light volume, because there's only 10 million shares out there. So from a volume metric standpoint, it says, you got to really kind of be careful and look around and probably watch the daily time frame chart out here. But again, as we put the daily time frame chart, and I know that you like to count the wave moves to the upside. This thing had recycled, after getting to that singing in the key of G. So right here after D, it started again. At this stage, hey, peak, in a daily basis, I've got it at peak D. Does it mean anything? Not just yet, but it looks like it wants to go higher. But I'd be paying attention to the daily chart. If this did pull back, I'd be looking right now at the trading session of May 18th. That's where the target would be, the bottom of that candle, that little red dashed line out here. That price point, I'd like to give it to you, but my system just not cooperating with me, and every now and then it does it. But I'll give it a kick in the pants. 58.39 would be the level, so about $4 down below where it's trading. Not saying it is, just saying to be, to be on the lookout on a daily basis because of the lightish volume. But otherwise, right now, looks like it wants to continue to move higher. The next question that came in, this was from Michael P., I believe. Let me see. And Michael P. wanted to take a look at CGC is the ticker symbol. CGC is Canopy Growth out here. And as we take, he's got two questions. It's a 2-4. So if we take a look at Canopy Growth, CPC, and I put this up here right now, just really stuck in a range probably between right now the 31.31 level and maybe 27.23 as we speak. Price testing Stevie's red line. It got a rising price oscillator above zero. If it can take out this 31.31 level, then it probably heads up. I say probably. It's got resistance. The next resistance, the high of April 3rd. That looks like right around 32.78 out there. If I pull this back a little bit further, that would say maybe get all the way back to the January 11th level around 35.88. So it looks bullish. But right now it's stuck at resistance, 31.31. That's the area you want to be watching the upside, 27.23 to the downside. The second question was also IWM for retracement. Oh, what did I do? Did I actually just close that down? I most certainly did not. There we go. Okay. The IWM for retracement. Before that can take place out here, Michael, you've got to get some type of bearish reversal signal. Prices moving higher, doing less relative energy. At this stage, price is doing nothing more or has done nothing more over the last couple of days. Come back and test Stevie's red line. It's really not much of a retracement. It's just kind of intraday movement. That's at 1647.80. You got to close below 1647.80 before any type of retracement targets come into play. And when that happens, then we go take a look at TAS market profiles and see what we have. But at this stage here, this has more upside potential, 1702.57, than it does downside potential, even though it's moving higher with less relative energy. Wait until the first bearish reversal candle forms. Otherwise, you're playing with fire. And based on the volcanoes and the way that those things have been going off, you do not want to play with fire because this could explode to the upside out there. So that's a twofer for Mike P. Thanks for writing in. And let's go to the next one. This is John in Sarasota. SQ is the ticker symbol that John wants to look at. And John wants to know, what is your projection for growth? And as we take a look at Square's above all kinds of resistance out here. Let's look at the weekly chart. The weekly chart, what this did, had a weekly swing point from March 19th of 83 million, was crossed with 38. Again, so we're just seeing a lot of light volume moves above prior swing points. There is the possibility of a 3 drive to a top setting up here, but that's still a bit of a ways off because if you're going to do this the correct way, well, what you have to do is grab the correct tool. And if we do that, that would say that wouldn't be coming into play until the week of July the 16th. So that says not until, another month or so. So this should continue moving higher out there. However, you were asking for a price projection. So let's see if I can come up with one. And that'd be good if I can delete this. So what I would do is just simply take a look at the A to B equals CD pattern here. And I'll give you the larger one. Well, that's the only one I can come up with. And that says what we're looking at, John, is probably 68.04. Maybe it's 68.04 by that time in July. And then you would have the potential of a 3 drive to a top pattern. That was on the weekly time frame for Square. And what did I do there? Okay, trying to do things too fast, a little out of sync, but we're doing. I didn't delete anything just yet. So thanks for writing in, and my pleasure for looking at it. We've got a question here from Ivy, And Ivy wants to know, WDR meets Mr. Garo's criteria. Please see if you think it would be a good entry price. So Ivy wants to take a look at WDR. WDR is Waddle and Reed out here. And as opposed to trading Garo's system, let's just take a look at what WDR is doing with Stevie's set of tools. I will assume, Ivy, that since you know what this is doing on Garo's system, you don't need my assistance there. Here, as we take a look at what this is doing, its price oscillator is just about to get to the 0 level. So I'm thinking that this isn't going to do much for a number of sessions. Might be 1, 2, 3, 4, 5 sessions here. You've got some resistance up at May 23rd out here. And what you want to see is you want to see this price oscillator get above 0. And if it gets above 0, test Stevie's red line, and then it's moving higher out here, well, then you're perhaps onto something. But at this stage, we don't have that answer. And onto something would say back to the highs. Your target would be the high of May 2nd. So I would just stay put, wait for that price oscillator to get to 0, wait for a test of Stevie's red line before you pull the trigger, because you're kind of right in the middle of where of support and resistance. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
folks. Ivy, I'd share one more thing with you. I've got Garo's set of tools up on my screen. And don't forget, he uses 4 different simple moving averages. He uses the 5, the 21, he uses the 50, and the 200. And so he would tell you at this stage you've got to be careful as well, because this is trading below. I believe he would. He can't quote me on that, but I believe he would tell you, Ivy, be careful because it's still trading below that 200 period simple moving average at 2014. Now, that makes sense with regard to what you and I looked at, which is kind of a sideways-ish move, waiting for the price oscillator to get to 0, then it tests the Stevie's red line, and then it reveals to us what the true direction is. And it could be to the downside out here. The last question that came in that we're going to be able to get to, and everybody, thanks for either sending in emails or in the den or calls. Love it all. Brad wants to know if we have a short-term pullback, is FDN or IWM a better short, and where is resistance? So if we take a look at FDN out here, and we'll look at it a couple of different, that's First Trust Dow Jones Internet Index Fund. What Brad wants to do is he wants to short something strong. And you're saying short-term pullback. I would say that doesn't fly with me. If it was a long term, then I'd say, okay, maybe something strong. Here, if I take a look at FDN and we just do the old wave count from April the 5th, right now we are trading in potentially a wave number 7, the 7th inning stretch. Potential, because it could also just simply be the 4th inning stretch, but not until this closed below 136.16 would I even entertain it. Short-term pullback would say go with something weak. The IWM is not weak. Global flow of cash is coming into that. Don't go against the global flow of cash. I don't care if there's no volume or not. Money will outpace what is going on, or the global flow of cash will roll you over, and you won't even know where it's coming from. I'm sharing with you where it's coming from. It's around the world. So if you're going to go short, I'd look at something weak like the Dow. Thanks so much for being here, folks. Stay tuned. Our favorite polar bear, David White's up next. Terrific Tuesday. Tom O'Brien, 3 to 5. Andy Heck, 5 to 6. I'll be back with you tomorrow at 1. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.